Good afternoon, everybody. You are all very welcome to the Herbst Software Contract and Harvest module webinar this afternoon. We are joined by Maura Mernan, who will be doing the demo. Sean is also here. So during the demo, myself and Sean will be available to you to answer questions on the chat, which is over on the right-hand side of your screen. We will be able to answer any questions that you may have during the webinar. If any of you wish to speak, we will field all questions at the end of the webinar. In the bottom right hand corner of your screen, you'll see the ability there where you can speak. There may be a queue for speaking, so we will operate this on a first come, first served basis. So apologies if you don't get to speak. We are also recording this afternoon's webinar, so the replay will be available to you if you want to look over it at a later date. Okay. So also, if any of you would like some follow-up information or to schedule a follow-up demo or call with myself and Sean, you can click on the offers button to the right-hand side of your screen, and you can request a call back on a time and date that suits you to discuss your requirements in greater detail. As today's webinar will only be an overview of the functionality. As you know, everything within Herbst Insight is completely customizable based on your requirements. So if you want to see a more customized demo on Zoom at a later date, you can do that through the offers button. So thank you very much. And I will hand you over to Maura now, who's going to do the demo, and we can take any questions you have during the demo.
Thanks, Callum.
Thanks, Callum.
So welcome, everybody. I hope you're all well. Thanks for taking the time out today. Today we're going to look at two topics, the bulk contracts and the harvest module. And as Callum said, this is just an overview of the two features of some of the features of the modules. It's not an in-depth session, but that can be arranged later on, as Callum said. So I'm going to start off with contracts. What this is about is being able to buy and sell grain in bulk and managing the contracts around that. So there are purchase and sale contracts of bulk products where you have agreements in place with your supplier or customer, for example, R&H Hall, Arcady, Comex. And the contract is usually for an agreed price at an agreed quantity with agreed drawdown dates and agreed payment dates. Now, when I'm talking in my examples, I'm just going to say supplier, but I do mean both customer and supplier. So in essence, this module manages the physical movement of bulk product and the financial aspects of the contract separately. It allows you to create the contract in advance so that the contract can be agreed months before the actual drawdown starts. It allows you to have several contracts with the same supplier for the same product running at the same time. So you can have several products going at the same time. It allows you to see what stage of the contract you're at. So quantities that are remaining to be drawn down. It gives an overall picture of the contracts for a particular product, say answering such questions such as what's the situation with rapeseed? Do we need to plan to buy more? And it allows you to plan production and your milling based on the availability. So I have prepared some videos that I'm going to use during this webinar. So you may need to turn up your sound a little bit on your device. Okay, so first of all, we will look at a couple of contract statements, which is a sales contract or a purchasing contract, and how to define the product, the quantity that's been agreed, the agreed drawdown dates, and the payment dates. So I'm just going to play a video for you now of what that looks like. Okay, so let's have a look at a couple of contracts. I'm going to show you a purchase contract first. Okay, let's just have a look at one. And I'll look at this one for Comex and Kenyon. Okay, so it was agreed on the 8th of May by Frank Green. we could put in their reference number in there to the reference, and that's our contract number there. If we look at the details here, we can see that the contract was for 165 tonnes of maize at €180 per tonne. First load is due to come in on the 1st of May with payment a week later on the 8th of May. The second load is due to come in on the 8th of May with payment on the 15th of May. And the third lot is due to come in on the 15th of May with payment on the 25th of May. Okay, so that's our simple contract. That specifies who it's with, the quantity that's been agreed, the price that's been agreed, when it's going to be drawn down, and when it's going to be paid. Okay, so that's what your contract looks like. Okay, so I'll just save that. Okay, so that's the contract itself, but that doesn't show you what's actually happening on the contract. So to look at that, we'll run this report called contract statement. Pick our contract and review it. You can see the state of play on the actual contract itself. So the top bit is just a summary of the contract. So as I said already, 165 tonnes of maize at €180 per tonne, agreed by Frank Green on the 8th of May. This section here called the drawings tells us what's actually been drawn down to date and if there's any balance remaining to be drawn. So we had expected 65 tonnes on the 1st of May and 60 came in. We expected 40 tonnes the following week, 35 came in, and then we expected 60 tonnes the following week and 30 have come in. So that leaves us in a position where we are still expecting 40 tonnes. So contracted, a little summary here, contracted 65, total drawn down is 125 with a remaining balance to be drawn down at 40. Okay, and some of the loads were split between the different lines of the contract. So the first line is fulfilled first, the second line is fulfilled second, and so on when you're bringing in the loads. Okay, so then if we look at the financial side of it, we can see again expected to invoice 65. We're expecting 65 to come in on the 1st of May. And we raised the invoice for it on the 8th of May. It's agreed. And then the 8th of May, we're also expecting another 40. And we invoiced that 40, and we've invoiced the third line as well. So that's the state of play on that contract. So it's incomplete from a drawings point of view. So we just probably need to follow up on that because we're expecting that in this week. Okay, so let's have a look at one from a sales point of view. So we're going to look at a sale contract. Okay, so we'll just open up a sale contract. We'll have a look at this one for Drummond's. This one here. Okay, so in here we've got a contract that was agreed on the 21st of May for 250 tonnes of rape meal. And same scenario, we agreed when it'll go out, when it'll be paid, when Drummond's will pay for it. So 50 tonnes going out the week of the 1st of May, another 50 tonnes going out the week of the 8th of May, another 50 tonnes going out 15th of May, another 50 tonnes going out 22nd of May, and our last load to go out on 29th of May. And we've agreed payments there. Which is, we've given them 30 days or 1 month's credit, so we're expecting payment within a month. Okay, so let's have a look at that from the actual activity on the contract. Okay, so as again, the top of it is just a summary: 250 tonnes of rape meal at €230 per tonne. This is our financial side, where we agreed when we're going to invoice. So if you look at the balance column here, we see that we've
were expecting 50, expecting another 50, expecting another 50, all in May. And then we had agreed to invoice in June, or they agreed to pay us in June. So these are balances reducing when the invoices are raised. Okay. This is the actual drawings then. This is what's happened so far on it, on the contract so far. So there's expected to go out 50 tonnes to go out on the 1st of May. Another 50 expected to go out on the 8th of May. Another 50 expected to go out on the 15th of May, but there was a delay. The first one was delivered on the 21st of May. 25 tonnes went out. Then there should have been another load, another 50 going out. And then there's two more actual deliveries on the 28th of May. So our balance to go out is still 175 tonnes. Okay.
Okay, so that was just a quick video of what the contracts look like from being entered, and what they look like from an activity point of view of what's actually been drawn and what's been invoiced. Okay, so as I said, you could have a number of those for each supplier, for many suppliers for the same product, all in play at the same time. So you would need to see what your product availability is over the next while. So you need to be able to see how much of a particular product is expected, how much has been drawn so far, and what's the balance to be drawn down. So we can find this out as well. I have another video on that. It's another report, and it brings all the contracts together to show you the state of play for a particular product. So I'm just going to start this video now. Okay, so the next thing we're going to look at is the product availability report. So that will give us the status of all contracts between two particular dates for a single product, regardless of the supplier. So let's have a look. So we pick a product, just one product. So we'll pick soya hulls. Okay, and we're going to do a run for all suppliers for this fiscal year. Okay, so here is our soya hulls availability between the 1st of January and the 31st of December. Okay, so we can see it's similar to the contract statement, but it's for all suppliers. So we can see what we're expecting in from each supplier. So we have R&H Hall, we're expecting 50 tonnes on the 2nd of January, we're expecting another 50 tonnes in the 6th of January, another 50 tonnes in the 18th of January, and so on. And as you can see, there's several contracts for R&H Hall for the same product. It's just different dates. So if we pay attention to the balance column, it shows that the situation. So the expected availabilities are increasing the balance, and the drawings are actually decreasing the balance. So this section here is some drawings that came in, and just one load that was split over a few contracts, a few contract items, and reducing the balance there. So you can see this is all in date, in order of date as it's expected to happen. Your expected and your actual drawings, your balance as it happened. Okay, so if we go on to the next page, you can see that there's a change of shade of background. So what that means is that white transactions are those up to today. So their current and previous transactions are shown with a white background. So the last white line shows you your position now, as of today. So on the 15th of May, we are still outstanding 1,040 tonnes. So we should have had that much in by now. And the transactions in grey are in the future. Okay, so this is what we're expecting to happen next. White is what we expected to happen up to now, and grey is what we expect to happen after now. Okay, so if I step through this, get to the end of this page.
or this section, we see that we're expecting 600. We're still expecting 6,125 tons to come in. And if I just look at the next page, it's the same situation for the financial aspect of it, for the invoicing. What we are expecting to invoice, what we have invoiced, and our balance here reflects that. What we're expecting to invoice increases it, actual invoice decreases it. And the same situation, we've got our white background for previous and current today's transactions, and grey background for future transactions. So if we go to the end of that, we can see that we have 5,685 tons to invoice. Okay. Any questions on?
Okay, so that gives an overall picture of the product we're expecting in and that's come in so far, but in a report format, which doesn't really, it's helpful, but we can view it another way so that we could split it out over the months ahead so that we can plan better. So if you need to see what's needed to meet your demand for the next few months and see if you have enough, this is quite useful. The next videos will show how to get that. So I'll just start this video now.
The next thing we're going to look at is the expected product by month. So this shown as a summary of what we're expecting in every month for the next while. Okay, so it's just a pivot. Across the top we have the products. So our beet pulp, rapeseed, soya hulls, sunflower seed, barley, maize, wheat, and a total. Down the side we have the year and the months. Okay, so we can expand that out. The dates are selected from here. So this is, if you look at the post date, so it's the contracts dated between those dates. So it's not the availability dates. So if you might need to go back a couple of years or forward a couple of years, depending on which way you want it. Like I've set up this and last and this and next 2 fiscal years. So I'm looking at 2019, 20, 21 and 22 that I've got contracts set up for. And I've got my availability date here down the side, and I can, on my bottom of my graph, so just in summary for the year, I'm expecting 1,650 tons of beet pulp, 1,860 of soya hull or rapeseed, 6,825 soya hulls, etc., etc. Okay, now I can break that down by month if I want to. So I can see the situation for each product in each month. So up here as well. So I've got in January for beet pulp of 100 coming in February of 100, and March of 140, April 130, and so on, right down throughout the year for each product. So we can see where there's gaps. So we can see there's rapeseed. We're not getting any in January, February, but that's probably okay. We've none due in April and May. That might need to be looked into, etc. So you can easily see where there's gaps. You can get totals as well per product and for the year. Okay, and if you expand it out to show the months, then the graph automatically updates to show you the months as well. So you can see it's sort of an easier visual representation of the table above. If you prefer to see things in graphical form, you can see where your quantities are coming in. If you want to get rid of some of the time on it, just change your dates. Okay, so that gives us an idea of what's due in. You could change that to a line if you wanted to, if you prefer that. It's easier to see for each product. Depends on what way you prefer looking at it. I personally find bar column easier to see, easier to review. So, any questions?
Okay, so that kind of gives us a better view of how we're fixed for the next while in terms of what's coming in. We could also view that from your supplier, like if you wanted to see how much have I contracted with a particular supplier for this year, you can just rearrange the grid view to show it by supplier as well. If I want to see a breakdown of actual by week, what's coming in, so I've seen it by month, but I want to see expected arrival dates as well. I could break it down into weeks as well, so that I can review it from that way. So I'm just going to play another little video for that.
Okay, so now we're going to look at shipping, right, and shipment dates. Okay, so this is a grid view based on our availability dates when we expect each product to arrive. Okay, so I can break this down by the year and by the week numbers. Okay, and I can identify where there's gaps. Okay, so across the top we have our products: beet pulp, rapeseed, soy hull, sunflower seeds, whole barley, whole maize, whole wheat. And down the side we have the week, the year, the month, and the week number, based on the date selected above, which is the contract date and not the availability date. Totaling the quantity of product that is expected in each week. Okay, so if we have a look here, at week 25, we're expecting 50 tons of beet pulp, 60 tons of rapeseed, 80 tons of soy hulls, and that's 255 tons of whole maize. So you can get a complete breakdown by week of what you're expecting in, not just by month, also drill into the weeks. Okay, so it gives you a very detailed plan to work with. And as usual, we can get that in a graph, so you can get a detailed picture of what's going on. It's quite useful.
Okay, so that was just some of the grid views and some of the reports that are available with this bulk contracts. So just to summarize again, that was just a quick introduction. These are contracts for the purchase or sale of bulk products, where you have agreements in place with your supplier or customer, and it's for an agreed quantity and at an agreed price, with agreed drawdown dates and agreed payment dates. So I'll just pause for a minute to see if anybody has any questions on that. If you'd want to put them into the chat. And remember, we can do an in-depth demonstration if anybody requires it. We can go into greater detail of how to set them up and how to manage them. So I'll just stop for a second to see if anybody's any questions. Oh, it doesn't look like anybody has any questions. So what I'll do is I'll move on to a quick demonstration of the Herbst module. Okay, so the Herbst module is all about grain intake from farmers. It's weighbridges, tickets, and most of you are using tickets and wait until the end of harvest, perhaps long after the grain has come in and been dried or treated and possibly even sold, before recording the fact that it was dried. You would have run the grain loss report to get an overview of the loss that was incurred. And at some stage, you would have created a product converter or a stock quantity adjustment to convert the green grain to either dried or treated grain. But with the harvest module, you can do this throughout the harvest season as the grain arrives and is actually dried. Then this gives you real live stock information as you process the grain. You don't need to wait until the final price is agreed before recording the fact that it was dried. This module, the harvest module, also allows you to create contracts with farmers for the supply of grain for an agreed quantity at an agreed price. In this situation, there are no drawdown dates or agreed payment dates. You get to choose which loads are applied to the contract. You don't have to split tickets when the contract limit is reached. You can also, in this module, you can pay farmers before the final price is agreed, and there are tighter controls in place now to reduce the risk of overpaying them. Also in this module, if there is a delay with test results, for the moisture, the bushel, the screening, and other parameters, they can all be entered onto different documents. So normally you'd have a ticket that gets converted to a receipt docket that gets converted to an invoice, and you would have had to put the parameters, the moisture, into the ticket. But now, after the test results come in, you can put them on the highest level document that exists. So if the purchase invoice exists, you can put the moisture level in on that and recalculate the price. You can put them in on the cost receipt docket, or you can put them in on the ticket, depending on what document exists at the time. And when we're running reports and converting the grain from dried or from green to dried, we use the moisture parameter from whichever document exists, the highest level document that exists. So it's either the invoice, the cost receipt docket, or a ticket. Okay. Controls can also be put in place to restrict users from editing harvest documents. For example, once a ticket is converted, a restriction can be put in place to stop users editing and going back and changing parameters on it. So if something needs to be changed, it's changed in the cost receipt docket or a purchase invoice. We also have, you'll see in a few minutes when I'm running some of the wizards that come with this module, that we have a facility to include or exclude documents that have been approved or unapproved. Okay, and there's also a couple of reports that are very useful in the module, the harvest control statement and the harvest pay sheet. So first of all, we're going to have a look at the conversion wizard. So this allows you to convert green grain to dry grain, or it allows you to convert green grain to treated grain. And it also has the facility where you can build in the costs of conversion into the price as well. So a product converter is created by the wizard, but the quantities available to convert depend on the location and the scope of the tickets. That's if they're approved or not approved, or if you don't really mind whether they're approved or not. If there's any internal movement of grain, that's recorded as well. So if you have several depots and you're moving grain between them, they're taken into consideration as well. The quantity of the dry grain depends on the average moisture of the contents, the average moisture content of the ticket selected. So I'm just going to run a video now, just to go through the conversion wizard. So I'll just start that off now.
Conversion wizard. Okay, so we have our tickets in for one of our locations, and we just want to convert them to, they've been dried and they're ready for sale. So we just want to record the fact that they've been dried. Okay, so we go into our conversion wizard, This wizard helps you in converting green grain to a finished product using a product converter. Okay, so what we see here on this first screen is the options available. So conversion method, two methods, drying or treating, and we're using the IFA conversion method. We can use another method if we want. So we want to find tickets posted between two dates, and tickets that are approved or unapproved, and in the location. So we just pick a location. I'm going to go with Wicklow. Okay, so here we can see the list of products that's available and the quantity of each that's available for us to convert. So if we look at barley first line, there's a total of 373.22 tonnes in the time frame that we just selected in the previous screen, and 40 tonnes out, which gives us a balance of 333.22 in Wicklow. And it's telling us that the product has more than one bomb for harvest conversion. So we'll look at that in a second. If we look at wheat, there's 163.96 in, and none out, so we have 163.96 available for conversion. On oats, we have 218.16 in and none out, so we have 218.16 available for conversion. We also have rapeseed, 206 tonne, and green beans, 10 tonne. So we selected one of these, so let's go with the barley. Okay, and it's telling us the product has more than one bomb for the harvest conversion. Okay, so if we come in here, this will show us then the list of tickets that are available that we're basing this figure on. So ticket number, the post date, the supplier, what type of ticket in, so it's ticket in or ticket out. So this stock internal movement is our movement out from one location to another, and then we've got a couple of warehouse tickets. Okay, so you can see their ticket kind, the quantity on them, the moisture that's been set on them, and the source of the moisture, whether it's come from the invoice, the credit, the cost receipt docket, or a ticket. Okay, so I'm just going to, there's a couple there that have problems, so we just need to fix them up. Let's look at this one first. So right click here and we can quick view the ticket. And on a ticket, this is a ticket out note. So on these we need to put in the moisture on the user field, not a parameter. Okay, so on this one, let's just put in moisture. Okay, and let's look at this one. So this is probably this is another movement out. So we fix it up in the moisture, or we could leave it out. I'll just put in moisture here. 19.5 on this one, let's say. Put a summary in, a comment in the security log. And in here we have two that are coming in for storage. Okay, so we might decide to remove those, or we might decide to process them. So if we're going to remove them, we can just take them out here, or on the right mouse click button. Okay, so down the bottom then it tells us we are going to convert 272.92 tonnes, and the average moisture is 16.74 for all of these. Okay, so go next. Just ignore that. Okay, so we have 272.92 of green barley from 17 documents are prepared for conversion for our Wicklow depot. So we need to select a bomb. Before that, we'll just have a look at the green moisture. So this is our average moisture, 16.74. What we're going to dry to, our final moisture, and our invisible loss. We just tick these on. So to show the product converter before saving it, approve the product converter on saving, and approve the selected tickets. So this will create a product converter, approve that product converter, and approve tickets that we're including in this, so they can be edited again. unless by somebody with the appropriate privileges. Okay, so what I've got here is I've got a selection of bombs that I'm going to use. I'm going to pick one of these to use as the method for drying. Okay, so we're just going to quick view this. So we've got two products in it, the green barley and the drying cost to dry it, if it's drying down from 16.5 down to 14.5. Estimate that costs €1 per tonne to dry. Okay, so save that. Okay, so select this one because it's the closest to what our green moisture is. Because it costs more if the moisture is higher, it's going to cost more to dry it. So I have my drying cost built into the bomb, so that's why I'm going with this one. Okay, so I'm just go next here, select my bomb, then hit next. And then I can review the product converter that's going to be created. So if we just look here, so here's our green barley of 272.92 tonnes. And we've got the drying cost for 272.92 tonnes as well. And the cost price was 50 cents per tonne. And up here I can see that the quantity of the dry barley, which is my finished product, in this case is 260.454 tonnes. So our dry barley has a smaller quantity as expected. Okay, so if I look at the notes here, I can see the conversion method that's being used, the invisible loss, the green moisture, so that's what we're drying from, and our fine moisture, what we're drying to, and the tickets that were included in this conversion. Okay, so if I save this and go and finish. Now if I go back in again and pick the same parameters for Wicklow. Okay, so now I've got 60 tonnes of barley left that I can dry, and if I just quick view that, I see that it's just these two tickets, my two warehousing tickets, that are remaining. I can't pick the same tickets twice. Okay, I'll just run through a treating conversion as well, same process. So we'll run the wizard. Actually, I'll show you that the wizard is also here in the procedures menu and the Herbst conversion wizard. Okay, so say next. Now we're going to treat some product from Wicklow. Let's just say we're going to treat some of the rapeseed. Okay, click on that. So here's our list of tickets. So I'm just going to pick the ones that actually have moisture so far, just to get an average weight. So I'll highlight the ones that don't have a moisture and just sort by that and go thanks. Take them all out because I don't want to include them. And I'll just go with these three, so I'm going to convert to quantity of 88 tonnes. The average moisture is 18.66. Okay, there's only one bomb for treating it, because the costs tend to remain the same because it's a chemical rather than an actual physical process of drying. So we'll go with that. We'll show the product converter, approve the product converter, and approve the selected tickets. And go next. We can see here as well the green moisture is 18.66. Just for information, we're normally drying to 14.5 and then visible loss of 2. Okay, so here on the product converter we can see the two source items. One is our green rapeseed with 88 tonne, and our treating cost down to 14.5% is 88 each at 35 cents a tonne. And our destination is our treated rapeseed product, and we're going to get a return of 86.24 tonnes on that. And again, if we look at the notes, you can see how this product was converted. So we treated it this time, invisible loss of 2, green moisture of 18.66, and a fine moisture of 14.5, and we included just 3 tickets in it. Okay, let's save that and finish, and that's how that works.
Okay, so that was the Herbst conversion wizard. That's probably the biggest wizard that's available within the Herbst module, which converts your green grain to dry grain as it's coming in. You don't, without having to wait till the end of the season until it's all in. So the next thing I'm going to look at is contracts within the Herbst module. So as I said already, the contract within the Herbst module is just with individual farmers for a quantity of grain at an agreed price. And you can set up a contract like you agree the first 100 tons for 180 euros per ton, the next 100 tons at 175 euros a ton, and the next 100 ton at 170 euros a ton. So you can have different prices within the contract with the farmer. In this situation, there are no agreed drawdown dates or agreed payment dates, and you get to choose which loads are applied to the contract. And as I said, you don't have to split loads, split tickets when the contract limit is reached. So I'm just going to, I have another video for that just to show how that works. I'll just start it off here. Okay.
Okay, so now we're going to look at the contract side of the Herbst module. So what this is about is if a contract has been agreed with a farmer for him to supply a quantity of grain product like barley, wheat, oats, or whatever, and there could be various different prices on that contract. So let's say he's going to supply us with 300 tons of barley, but we don't care when it comes in. As long as it comes in, it could be agreed months in advance, weeks in advance, could be agreed as the harvest kicks off. It's there's no limits about when it can be created. So what can happen is that you can agree a price with the farmer for, say, 300 tons, and let's say the first 100 tons is at one price, the next 100 tons is at another price, and the last 100 tons is at another price. And what the system does is takes care of tickets that are coming in. They're not assigned to the contract as they come in. They're assigned to the contract at the end. Okay, so let's just have a look at a contract. Okay, so we can see here we've contracted with a farmer called Seamus Flaherty, and he has we have agreed with him to buy 100 tons of green barley at 180 euros per ton. Then another 100 tons of green barley at 160 euros per ton. And then another 100 tons of green barley at 165 euros per ton. So as the tickets are coming in, they're given the standard price for whatever the standard price is set to, whether it's on a special price for him, or which he has here, or it's the actual product price for this year. So I know that probably hasn't been agreed yet, but it will just use whatever price is on the product or on his special price. So we'll just have a look at his special price. Oh no, we won't. We'll just go on and do it. So you can see the 3 lines of the contract here. Okay, so let's go and just have a look at his tickets and his purchase invoices. So what's happened in the process so far is he's been drawing in the green barley, and it's been weighed in, it's been weighed out, it's been tested. The moisture, the screenings, the bushel have all been recorded on the ticket or the cost receipt docket or the purchase invoice. We don't know which. So these are his. So we've also converted all the cost receipt dockets to a purchase invoice, and it's when the purchase invoice exists that we apply the price in the contract. Okay, so what we do is we go to the procedures menu, go to harvest, and we apply contract pricing. Okay, so we look for the contract first. So depending on what date it was actually raised, we need to find it, and we pick our supplier, which was Seamus Flaherty, and I know the contract was drawn up in April, so the dates I've selected there should help me find it. And here's our contract. We can view it from here if we want to make sure we have the right one. We do, because there could be several in play from the same farmer for the same time for the same product. Okay, it's just different contracts, different documents. You need to select the right one. So what we see here is that we have a total quantity of 300. Okay, it doesn't tell us the prices as of yet. Okay, so on the next screen it says you can please choose the purchase items you wish to add for this contract. Okay, so you can view or edit the document items before applying the contract pricing. To do it, quick view on the toolbar or the shortcut menu. If you do not want to apply pricing for any of the document items, select them and click remove. Contract items, 100 tonne at 180, 100 tonne at 160, and 100 tonne at 165, and the rest goes back to whatever his standard price is, whether it's coming from his special price or the product price that's active on the day. Okay, if you want to, you could backdate the standard price for the rest of it, so go to the end of the fiscal year, and it would pick up the price that was active at the end of the last fiscal year. So I'm just going to leave it at working date. Okay, so what I do is I add in the items that I want to apply the contract price to. So here's a list of the purchase invoice items and the associated tickets that generated each line of the invoice. Okay, so I can just pick some of these. Now I'm just going to pick them. If I want to, I can sort it here by ticket number. So normally you'd have agreed with him that whatever order they came in and that the contract would be applied in that order. You know, you'd start the first load in is first part of the contract. Okay, so you'd select a number of these. Let's just pick that many. Okay, so now this is telling us that, I'll just touch this down a bit so we can see them all. We have a contract for 300 tonnes of green barley. We have 365 selected and 65 over. So we've gone over the contract by 65 tonnes. So we can get rid of some of these lines. So if you look for the quantity, you probably delete the ones from the bottom as they were the first ones in, or the last ones in. As you remove them, you'll see the figures changing. Okay, so we're 25 over. Now I don't want to delete that one because I want to show you what happens when the contract is split, when the end of the contract is reached and the price goes back to standard price. So I'm going to delete this one instead. Okay, so we've got contract for 305 or contract for 300. Select 305 or 5 over. Okay, and we want to apply the pricing to the tickets in this order: 1, 2, 3, 4, 5, 6, 7, 8, 11, 20, 21, 23. Okay, so just hit next. And it applies the price. And as you can see here, these first lines are applied to the first line of the contract. And you may notice that there's two numbered ticket 6s here. So what happened was that this ticket, which had a quantity of 10, was the limit of the first line of the contract. So 5 tonnes applies to the first line and 5 tonnes applies to the second line. So the first 5 get the price of 180 euros per tonne, and the second 5 get the price of 160 euros per tonne. So if we add up this quantity, we'll see that it's 100 tonnes. There we go. Then if we look at the second, anything with -2 at the end of it, and we total them, we'll see that that's also 100. Okay, and our third lot will be 105 because we're 5 over. Okay, so anything with a 1 is applied to the first line of the contract, that the price is taken from the first line of the contract. Anything with a 2 at the end of it, the price is taken from the second line of the contract. And anything with a 3 after it, the price is taken from the third line of the contract. And anything with a dash after it was part of the contract, was part of the consideration, but was not applied. So the price went back to the standard price, so which was 175. Now these purchase prices are adjusted for the price parameters. So that's why there's a difference between the purchase price and the standard price. And you save that. And can have a look at it, and you can see the purchase invoice that relates to that. Okay, so it's that's all that's involved in that.
Okay, so that was applying a contract price to loads that a farmer has brought in. We have an agreed contract in place with him. There's two more things to show you. The first is just a couple of harvest reports that the system generates. It just gives you a summary of where you are, what you expect to pay for the product that has come in so far, and you can drill down into it. I'm just going to start a video to show you that now.
Okay, so now let's look at two reports that are part of the harvest module, the harvest control statement and the harvest pay sheet. So I'm going to run the harvest control statement, and I'm going to open the harvest pay sheet from within the harvest control statement. It can also be run independently, but I'm just going to run it from within the statement for now. Okay, so I'm running the harvest control statement, and I'm looking at all transactions for this fiscal year from all suppliers and all depots. Okay, all right, so I just zoom in on this. Okay, that's too much. Okay, so I'm just going to look at a few of these. Right, so I've got my list of suppliers here and a quick summary of what we expect to pay them. So this is a snapshot of where we are now with regards to harvest payments. So it might not be our final payment, but it's sort of gives us a ballpark, an estimate figure of how much we expect to pay, because the final price mightn't have been agreed yet. So these are just estimates so far. But you could probably, you probably have set a base price that's, if a good estimate, it's more or less around what's going to be paid or the final price. So we could probably make payments on some of these accounts and we'll be safe enough. Okay, so just a quick look. So we've got our supplier's code, our supplier name, the amount they owe us, or the amount we owe them, VAT exclusive, the VAT amount, if they're paying IFA levy, any payments or contracts that have been made on their account so far, what the net due is on their account. So this is sort of an estimate. This is our estimate of what we owe them now. And if they have a customer account, we can also see what balance is sitting there on that customer account, because it could be contract off against supplier account, reducing their balance of what we owe them. Okay, so what we can do here is we can drill into the supplier account if we want to see where the balance is coming from, whether it's made up of invoices, cost receipt dockets or tickets. So you can drill into the customer account or the supplier account to have a look around. You can have a look at the customer account by clicking on the balance over here, the customer balance over here, and having a look there to see where's that balance coming from. If you want to raise contra, that kind of action. Or you can also, as I said, you can look at the harvest pay sheet, which gives us a detailed breakdown of where the amount we expect to pay the supplier, where that balance is coming from, where that amount is coming from. So this is just a snapshot. It's a quick overview. We have a total that we can look at. So we're expecting so far 276-ish thousand to be paid for harvest. Okay, so if I drill into maybe if we have a look at Sean here for the same period across all depots, then we can see a list of all the tickets that have come in from Sean. Okay, so it gives us the complete picture of where that his summary for this year comes from. So the ticket number, the date it came in, what product it was, the moisture, and other parameters, the base price, the adjustments based on the parameters, and then the final price, the VAT rate he pays, the quantity that was on the ticket, and the value of it. You can look into the ticket if you want to see further information on it. Okay. On the second page of the report, we've got a summary then, just a summary of what the value of his tickets or his transactions so far, VAT on them, the total, if he's paying IFA levy, that's deducted from it, his total then, and if there was any payments, and his current balance, or current estimated balance. Okay, just close that, and I'm going to open another one for myself, because actually I look for John Ryan as he has a payment on his account, and you just see a slight difference with this one, that again we have all his tickets, the product, the moisture, the base price, the adjustment for the moisture, the new base, the price is being paid, VAT rate, quantity, and the value, and a summary here. The summary here of, this is an average of the moistures for each product that's listed above. This is just sort of a snapshot of what his balance or his estimated balance is made up of, or the value of the tickets plus the VAT, minus the levy, minus any payments, in his case 16,000, and then the net due. This can be sent out to them at any when you're ready to send it out, when when final prices are agreed, but in the intervening time it can be just used as your estimate. Down here we've got your payments that you've made to the supplier already, and you can open that if you want to see the details of it. Okay, I just want to show you Seamus Flaherty, because he was on contract. He had a contract agreed with us. So we just want to look at his statement, his pay sheet. So we had earlier that he had a quantity agreed at 180 per tonne, another quantity agreed at 165 per tonne, and then more at 165 euros per tonne. What we've got here is, in this column, is the actual tickets that are assigned to those contracts and what line in those contracts they're assigned to. So you get all that information on the pay sheet. And again, if there are payments, they'd be shown here. If there are no payments, it doesn't show them, and the totals. Okay, so that's a quick overview of the Herbst pay sheet and the Herbst summary. As I said, you can run the Herbst pay sheet from here. You don't need to go through the summary or the control statement to get to it. So if I look at myself from here, it's the exact same report giving the exact same result. Okay, so that's it's quite a handy utility.
Okay, so that was the two reports that are included in the module, the Herbst control statement and the pay sheet. Okay, so just one more thing to show you. It's this is if you want to calculate the equivalent dry quantity of green grain that's come in. So it's allows you to work out the equivalent dry grain. So it allows you to estimate the quantity of dry grain that you will have available for sale or for going to your mill. And a wizard is run and the results are saved to the document, so you can use them in pivots and in reports if you want to. So I just have a very quick video on that.
Okay, so I'm just going to run through running the calculate dry quantity wizard and just reviewing the results of that. Okay, so I've either select my wizard from a shortcut on the startup screen or from the procedures menu. Okay, so it's just welcome to the Herbst calculate product dry quantity wizard. This wizard helps you calculate the dry quantity for selected document products. Okay, so I'm given a choice of documents to include in this run. So I can filter by the date, the scope, whether the document is approved, unapproved, or I don't care, the location in question, and the type of documents I want to include. So I'm going to exclude purchase quotations. Okay, and I'm going to go next. Okay, so what it does, it prepares the list of documents for me. Okay, so you can view or edit documents before calculate dry quantity for them. To do this, quick view/edit on the toolbar or in the shortcut menu. Okay, so just produce a list of the documents that I've selected. Highlights any that have an issue. So as you can see, there's 12 documents need my attention. So I'll just find them and have a look at the various issues. For no blanks. Okay, so I can see, based on the names of the columns here, I can see the moisture is missing off them all. So the lab results haven't come back yet. So I'm just going to exclude all these. So I just highlight them and remove them. And then I've got my my list without any problems. You might notice here on the right hand side that the moisture source column tells you where the moisture is coming from on a particular document. So even though I've got a cost receipt docket selected here, it's picking the moisture from the purchase invoice, as that's deemed to be the most correct, and it's going to update the cost receipt docket. It's also shown me what the results of the calculation are going to be. So I've got 10 tonne here of green barley on this cost receipt docket, and that's going to convert to 9.49 tonne of dry barley. Okay, so if I just hit next, again it just produces a list of all the dockets that are going to be modified for me. There's all of them there, and hit next, and it saves them all off, and I finish. Okay, so now that's what that's done is it's updated an item user field on all those documents to enter the dry quantity for me. It's put in 2 user fields, one called dry quantity and one called dry quantity BMU. So one is in the unit that the document is created in, unit measure, and the BMU quantity is in the BMU quantity of that product. So I'm just going to open the grid view here, and these are the tickets, cost receipt dockets, purchase invoices, or whatever other type of documents on the purchases side that were updated with the dry quantity. I can pivot that to sum the dry quantity and the quantity by product. Okay, so it gives me, I'll put name in there as well, gives me just a summary of what I'm expecting for each product. So I've got the green quantity there and the dry quantity there. Now the oats were not included, so but for every other product I've got, what I might need to do is filter the grid view to show only products that where a dry quantity exists. So if I do that, I'll get a better actual show non-empty values. Okay, I'll get a proper reading. That's more like it. Okay, so I've got barley, oats, wheat, green barley, green beans, green rapeseed, and the equivalent quantity of that in dried. Now that might not be match exactly when these are actually converted using the wizard. You might not get actually that exact figure, but this is just an estimate, so you can project your sales of it for later on. Okay.
Okay, so that's everything I have to show you in relation to the Herbst module and the bulk contracts. So if you have any questions, now is the time to raise your hand or to put it in on chat.
So just one comment I want to make as well, that contracts can be at both dry price and wet price, which might be a way of dealing with soy and rapeseed and stuff. There's a couple of questions that come in privately there, and we might get back to you after the webinar, because there's one of them a bit technical, which I think I won't take up on the webinar itself, but we will get back to you on that. Also, don't forget, as Maura said before, this has been a snapshot of it. We need to kind of go into a little bit more detail of your individual requirements, and we will do that on an individual Zoom menu. So don't forget to click the offers button there and actually ask for a follow-up call, because that's where we get into some detail. All right. Thanks very much. So, and any questions, by all means, we'll try and answer them now. We are here we are here for you. We're not going anywhere. Such. You needn't be shy. We all know each other, so you can ask away. You know. Okay, sure. Look, I suppose he might prefer we get back to an individual basis. I want to thank you all again for taking part in the webinar this afternoon, and hopefully, look, we will be talking to each other again. Is that okay? And thanks, Maura and Callum as well. All right. Thank you very much.
Everybody.
Thank
Thank you
you.
very much. Just to reiterate, the offer's over on the right-hand side there if anybody wants to make contact, or you can contact myself or Sean individually if you would prefer. Thank you very much. Bye-bye.